Hi everyone, Kevin here. Today I'm going to walk you through opening your first investment account. There's lots of different platforms to open your investment accounts online. So you can do it through Wealthsimple, Questrade, Qtrade. Sure, there's lots more. Depends on where you are. This is all for Canadian-based stuff, though. That's what I'm going to go through because a lot of stuff online that everybody tells me about is U.S. focus and things like that. So I'm going to do one that's just all about Canada. Hopefully, this answers a lot of questions for people who ask me about investment and how to get started for it. And that's basically why I'm doing this, because I do get a lot of questions about that from people I know, how to get into it and how to start it. So I'm going to walk you through the basis of it and how this all happens. You're going to have to do your own research on what platform you want to trade on. Again, because I trade with iTrade, it's because I get free ETFs, I get preferred stock buying pricing, things like that. But a lot of the other accounts are really good. My daughter uses Wealthsimple. So those are the type of things. So you're just going to have to make your own decision on that. I'll throw up a picture of some of these trading platforms that you can trade on, and you can take it from there. But I'll walk you through how to open one at Scotiabank and all the steps. I'll also talk a little bit about budgeting, setting it up on PAP, and things like that. But this video is just going to be about opening an account. Okay, so let's get right into it. We'll talk a little bit about it and what accounts you should be opening. Okay, so we're going to open up the accounts. So the thing about it too, just before we get started, is there's 5 accounts. You're probably going to open up 2, but there's about 5 different trading accounts you're going to open up in a self-directed trading account. So you have RRSPs, you have TFSA, you have an RESP, you have a cash account, and you have a first-time home buyers account, which is an FHSA, right? So those are the accounts that you're going to open. Are you going to open all of them? Well, that depends on your situation and everything like that. If you don't know where to begin or what you should be doing, the first account I would recommend opening is a TFSA. Because the difference with, I'll get into all these at one point, not in this video, this is just the basic stuff that we're teaching. So you're going to open a TFSA. If you open a TFSA and you fund a TFSA, you can move the money into your RSPs, you can move it into your first time home buyers plan, you can move it into your RESPs, you can do whatever you want with it. The thing about a TFSA, there are rules, and there's rules to all these accounts. So before you go and do anything or move money around, you need to understand what the rules are for each account. TFSA, the reason you can do it is because you can move money out of it. Again, there are rules. If you move money out, you do not get that allocated room to put the money back till the following year. So there are a bunch of rules with this, and I'm going to go over this in another video, what these rules are and how they apply. And all this stuff that I'm talking about today is Canadian related. So this has to do with Canadian accounts, because a lot of the stuff that I see online and things like that are usually US based or REFs or 401ks and things like that. So I figured I'd do a video about Canadian investing. The reason why is helping everybody out that I work with and things like that, and friends, colleagues, family. Everybody always asks me the same question: how do I open these accounts? What do I do? How do I open an investment account? So I'm doing this video so one, it gives me a place to direct them to as well. So we're going to get into it. We're going to start with that, but your situation depends. If you know you're going to want an RSP, TFSA, RESP, and things like that, I would recommend opening them all at the same time, and it just makes the process easier, especially with iTrade or any of the big banks, because you have paperwork, documents, you have ID, things like that, that all has to be processed, and they don't draw it in from your last application. You always have to seem to providing it for each account. So we're going to get right into it. What we're going to do is we're going to open up the iTrade account, like I said, and we're going to go through there, and I'll walk you through the process. I won't be able to finish the process with you because I already have the accounts, so I'm just trying to set up a dummy one. So we'll get to it. So first we're going to go straight into the iTrade account. Okay, so the first thing you're going to do is you're going to hop on your computer and you're going to go to iTrade or the platform that you're going to trade upon. As you can see right here at Scotia iTrade, they have $4,000 cash back, $4.99 stocks, ETFs. So a lot of the accounts, the ETFs, will be free. They have a selected amount of ETFs that you can trade for free. They're all in a category. Usually the ones that I'm picking, or most people who pick the index funds that they're going to pick, are going to be the free traded ones. That means you could buy one and you don't have to pay a transaction fee. You can buy multiples or whatever, but the transaction fees are free. Then what it is, if you buy stocks, you're going to end up paying $9.99 is what Scotiabank charges for stocks. So you're going to pay $9.99 for a stock, and most of the big banks charge $9.99 as well. A lot of the brokerage accounts online and things like that, they won't charge you for that. They'll charge you either $4 or some just free trading, things like that. You'll have to look into it. But if you're investing over the long haul, and you're using this as an investment account, there's things you can do to allocate that. So in other words, you fund the account till you have approximately enough to buy 10 shares, and then you're splitting the $9.99 over 10 shares. That's $1 a share to buy, things like that. But for the most time, you're investing, and this is about investing. Investing is long time hold. So you're going to probably be buying index funds, ETFs, which you're not going to pay a fee on. So regardless of what account you buy them in, some accounts will have maintenance charges when you're under a certain value, things like that. These are all the things you're going to have to look for. I'm not telling you what account to trade in. I'm just showing you how to get started. Okay, so first thing you're going to do is open up the account. You're going to click the open account button. You're going to come to the page. In here, you're going to be selecting the account you want to open. So we're going to start with a TFSA. But also too, here, the reason I said Scotiabank's harder is you have to fill applications out for a registered education savings plan for your kids if you have it. If you want the first time home buyer savings account, you have to fill these papers out by hand. So these are two application processes where you actually have to type everything in. And when I mean by hand, I mean like a PDF online, and then you have to bring it to the bank and hand it in, and then they'll process your account. I've done this. It doesn't take that long. It's really not a big deal. It's just the inconvenience. You actually have to go to the bank and drop off the forms. So whether you're going to be an existing customer or a new customer, so that's what we're going to talk about. So I'm going to start with new customer. So we're going to click on new customer, and then we're going to go to it. We're going to go start our application. You're going to agree to all the terms and conditions, which everybody's read. Then what you're going to do is you're going to pick the accounts. The reason I say you're going to want to know ahead of time which accounts you're going to open, there's like 5 accounts. There's like 5 accounts you can open. You could open more, but there's 5 accounts that you're probably going to want to stick with. So in this one, the RESP, we have to do the form up front, and the first time home buyers, we have to do the home up front. So this place, we can only open 3 accounts, but we're only going to open 2 today. So what we're going to do, so an individual cash account, and that means whatever you trade, you're going to pay capital gains on this one. So this is the one you're going to pay capital gains on. Anything you make, any profits you make, you're going to pay taxes on. Tax-free savings account. So again, this is a savings account. This is what you're going to invest in. This is the one where you can move money in and out. Again, there's rules to this. There's rules to all these accounts. You need to understand the rules before you start funding them, moving them around, and doing stuff like that. But if you're going to start anywhere, start with a TFSA, because you can fund it and you can actually take the money back out and move it into another account if you like, without a penalty of any kind. Or affecting contribution room for the next year. You get the contribution room back. And then the other one you're going to open up is you're going to open up an RESP. Okay, so there's multiple RSPs. You can open up a spousal RSP. That means that you can contribute funds under someone else's name, and they're joint beneficiary of the account. But we're not getting into that. So then you're going to open up an RSP. And also, too, you want to keep in mind an RESP is a registered retirement savings plan in Canada. And then also, too, you'll see them on some of the sites. They say RESP. RESP is a retirement savings plan. It is the same thing. It's just not registered yet. They should register the account when you open it, and then it becomes an RRSP, registered retirement savings account. That's the difference with the 2 R's or 1 R. Okay, so then you're going to open up these 2 accounts. And I'm speaking fast because I know people that really don't want to watch a video all day. So we're going to go through this. Then you're going to open it up. If you have a code, you're going to click that. You're going to click continue. And then you're going to start filling out all your names, right? So you're going to fill out whatever it is, your doctor, your name, your address, your last name, date of birth, SIN number. You're going to need all this. You're going to need mother's maiden name, citizenship. Are you a U.S. citizen, taxpayer? No. You're going to go through all these application stuff, your ID. So the thing about it, you're going to need a piece of ID. You're going to need an Ontario driver's license or a Canadian driver's license, Alberta, whatever province you're in. Passport. you're going to need some kind of government documented ID to open up an account. Regardless of whether you're an existing customer or not, they'll ask you for this at the big banks, which I find annoying. But anyways, and then you're going to fill out all the information. You're going to continue. And you're going to keep going through it. And they're going to ask you multiple questions. And they're going to ask you if you have this or that. If you own a company, things like this. And you're just going to go through it, answer the questions truthfully, best to your ability. And then you're going to click submit. Once you've submitted the form, your account will take a couple days to be active. And then after that point, and then we're going to get in to start funding it. So if you do this online on one of the trading platforms like Questrade or iTrade or something like that, this will be really quick. You might even be able to open the account up that day and be able to fund it that day. But this is basic process of going through it. They're all very similar in the type of questions they ask and things like that. So this is how you would open up the accounts. So now what we're going to get into is the next step. Okay, so you got your account open, you're ready to do something with it, and we're going to get into that step now. Okay, so you're going to start funding the accounts. So you have accounts, you got them set up, you decided which one you're going to want to fund. Again, so whether it be a TFSA, we'll go with that one for now. So you're going to fund your TFSA. So it depends on where you're banking and what you've set up with for your trading accounts, how you're going to fund these. Either you can do automated transfers that are going to come off every 2 weeks when you get paid, or every week when you get paid. You have the funds transferred out into that account. Then you're going to actually wait until you have enough funds to buy the portfolio stocks that you want and items like that. But that's how you're going to fund them. You're going to set up a budget, you're going to allocate funds to it, and those funds, so you're going to make automated to come out. If you're like me, I just put funds in when money crosses my hand. So I have my automated process up, but also too, as funds cross my hands, depends on where they come from, because I have different businesses, different things like that. So I get money at different times. I allocate percentages. So a percentage of money that crosses, whether it be 20%, 50%, or 10%, there's a certain percentage that's allocated that goes into my investments. And then those investments get allocated, split forth between RSPs, TFSAs, or things like that, or cash accounts. Depends on the situation, whether you have things funded fully or not, and the advantages and what you're trying to take advantage of, or what your direction you're trying to go with these funding of these accounts. And that's the goals that you have to set up when you're starting to fund these accounts, where you want the money to go and what you're using it for. That's important. So you got to figure that part out. But for now, we'll go with TFSA. So you're going to fund it, you're going to transfer funds into it, and you're ready to buy stocks. So what are you going to buy? So I'm not a spokesperson for anybody, anything like this. I'll just tell you what I do. So one of my biggest funds that I buy is Vanguard. So I buy VFV.TO, okay, which is an index fund. It's basically mirroring the S&P 500. The reason why I buy that fund is it's one of the first funds I ever bought. That was an index fund when they came out. I like the fund, has good growth, it's consistent, has low MER, which is management expense ratios. And it's probably one of the lowest ones I've ever come across. You know, people can correct me if they're wrong, but it's a great fund. Depends on what you're trading in and what accounts in. Sometimes there'll be withholding tax coming from the US for dividends, things like that. I don't worry about a lot like that. The expense ratio of it is so low that it's just a great fund, in my opinion. And I do buy a couple stocks, buy a bond fund, things like that. Again, they're all Vanguard. But we'll talk about one thing for now. That'll be VFV is what I'll use. You can pick which one you like, but I'll talk about VFV. Okay, so you're going to fund it with VFV. So now what you're going to do is you're going to go into your stock account. You're going to do a stock purchase. So we're going to get into that. I'm going to walk you through that in the video. A quick way on how to buy your first stocks. Again, I don't have dummy accounts set up to do this. So I'm just going to kind of try and walk you through one of my accounts. See what I can do if I can show you how to purchase a fund. Might not get right to the end of it. So I'm just going to talk about MER, management expense ratios, really quickly, top level conversation about it and what it is. So basically what it is, it's the money that's taken out of a fund to manage a fund. It's just like anything else. It is a business. They do have expenses. They have overhead. They have costs. They have staffing. They have people to pay. The thing that you want to look for is you want to look for one with low fees. And why is that important? Well, because fees are actually technically coming off of the profit that you would make on the share. and you want something that's managed well, that has low fees, that they're not trading in a lot to add these fees to it. So the reason I like VFV, again, not a spokesperson for them, just like the fund, is that its expense ratio is one of the lowest I've come across, okay, in Canada. So basically it is like 0.09%. When you compare it to like a mutual fund at a bank or anything like that, that I used to buy, one of mine was like 3 point something percent at one time. And when you're trying to plan for retirement where you're only going to be drawing about 4% of those funds, 3% eats up that 4% pretty quick. And that's one way you got to look at it. It's actually taking away from what you're going to have for retirement in the long run as well. So if you think about you're losing 4% growth on a fund year over year, that adds up to hundreds of thousands of dollars by the end of your investment career. From like when you start investing, if you're young, which you should do if you can, um, to the time you retire, you could lose out on hundreds of thousands of dollars just in fees that you're not even aware of are happening. And this is a very common thing. They've come down a lot in Canada recently because of all these other options coming into the market, hence like Vanguard and BlackRock, very low funded index funds, very good options for things like that. I just like VFE. It's what I started with. It's what I carry on with. So these are the expense ratios. So this is kind of an example of what it is. You can see here in the chart, these are what adds all up to the MER. And this is kind of what the average ones are for a lot of mutual funds, things like that, that you buy. And this is what it is for Vanguard's VFD index fund. It's 0.09%. You can look this stuff up on their site. You can do whatever. Even the bond fund that I like from Vanguard, I think is like 0.12%, something like that, around there. Again, it's a low, very, very low bond fund to buy. So this is just a quick thing on MER. Hopefully this helps you out understand what MER is, and that's what you're looking for. You're looking for a nice low percentage on MER. Right into it. We're going to do our first trade. So again, I'm using iTrade, using the Wealth Portfolio account. So when you open up an account with Scotiabank with iTrade, you'll actually see it in your banking side, and you'll also see it on the wealth trading platform that they have. They developed a new platform. So this is the wealth trading platform, because imagine this will be what everybody's going to be using in the future. Okay, so the first thing you're going to do is when you get into it, you'll have a bunch of stuff. It'll show all your accounts. You're going to click on trade. So that'll be on the left-hand side, and then you're going to click what you're going to trade. So you're going to invest in a stock or an ETF. So you're going to click on that. And then you're going to click on the next thing. It's going to come up. It's going to be trading. And then what you're going to do is you're going to search for basically the ETF or fund or stock that you would like to invest in. And in this case, we're going to use VFV. So I typed it in, got it there. So and then you're going to type VFV, and then you're going to end up clicking search, which will be the little search icon. This will come up. Then what it is the reason this comes up is to make sure you're choosing the right one, because as you see when you type in little acronyms, the basically stock symbols, you'll come up with different ones and they'll give you different options. But this is the one you want. You're going to want VFV. I say .to because that's the way it is, the ticker symbol on the S&P 500 and things that when you're searching it, this is just the Canadian Stock Exchange. CA, Canadian Stock Exchange is what it means. Okay, so then what you're going to do is you're going to click on that one. It's going to say CA, and you're going to click this, and then what's going to happen is the next thing is going to come up. It's going to populate it all. So that's going to confirm you want to make sure you're trading a stock ETF. This is what it is. The date, it'll be there, what you're trading. It'll be the fund name. It'll be the market price that it's at right now. Whatever it is on this trading day, this is what it was. This is after hours trading. So right now we're not trading after hours, but this is after hours. The market's closed. So this is the last what it was trading at. Then you go down, you're going to search, you're going to click continue. Then you click continue, and then you're going to get into the next part. So now this is where you're going to fill it out. This is where you're making your trade. You're deciding what you're going to do. It's going to show you how much funds you have in your account for your trade. You're going to be buying. You're going to buy the price. So what this is going to be a price. You're going to buy at market price. So you can stick limits and things in, but you're investing long term. You're just going to buy it This is the way I do it. I just buy it at the price it's at, whatever. And then you're going to put in the quantity that you're going to want to buy. So in this case, we're just going to buy one. And then how good is this offer to buy for? So because we're just buying at market price, we're only putting the bid in for the day. If you had a fixed price and you were hoping it was going to drop to it, and you put that price in as what you wanted to buy at, you need to say when this expires. If it doesn't happen today, cancel the order. That's the type of thing what you're going to do here when you're saying day or when you want it to expire. See here, there's a commission fee. This actually no commission fee, but on this new platform, they actually show commission fees all the time. I don't know why. Anyways, this is the total price you're going to pay. So that's the shares they're anticipating it's going to cost. This is what it is. That's what it's going to be. And then you're going to click review order. Then once you review the order, you're going to go through it. Make sure that you're buying the type of fund you want, that you haven't made a mistake. It says the quantity you're buying, the name of the fund. It's a buy order. It's market price. Here's the price. You get one share. And again, this price could change anytime, but it doesn't fluctuate that fast. One share. It's good for the day. Here's the price of what they're anticipating you're going to end up paying for it if you click the buy button right at the moment, because that means this is what people are offering to sell it. Just because this is the listed price, that doesn't mean what the people are offering to sell the share for. And that's what you're going to end up buying for. See, the commission's been removed. So there's no commissions now for this ETF. And they have lots of ETFs on Scotiabank they'll charge commissions for, or iTrade. Here's the total price, and then you're going to click buy. And then once you click buy, there'll be some warnings here or anything like this. Like this one is a warning that this is aftermarket. This won't be acceptable till tomorrow because it's after hours right now. When the market opens tomorrow, they'll put this order in. And then you would click buy. And that's pretty much it. And then after that, you've bought your first share. So the share will execute. You'll go back into your account. You'll see the funds have been withdrawn. You'll see your shares in your portfolio for that account. So if this is a TFSA, you'll see it in there. And that's it. It's that. Congratulations. You just bought your first share, your first index fund. You've done your first investment. You're on your way. So overall, really wasn't that hard. Like anybody else, it just takes a little bit of guidance, a little bit of help and encouragement to make these first steps into your investment, into your retirement, into your wealth building career. And that's what it is. It's a career. You're working at building some wealth. And hopefully this is helping you getting started, moving forward. Keep doing your research, keep doing your diligence. Watch a couple more of my videos I'll be coming out with. Follow me to subscribe. And I'll be sharing more stuff about this. Hopefully it helps. All this is more beginner orientated. It's not for the advanced. It's basic steps to start what things are and fundamentals of it all. Okay, I hope this video helps you out. I hope you do some great investment. I hope this helps you work toward your career goals in this wealth building adventure. Okay, take care. Have a great